Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee. Joining me are my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitton, and Managing Director of International Content, Emily Parker. Good morning. Happy Monday. How was your Thanksgiving?
It could have gone better, but I'll take what I can get.
Oh no. Some explosive turkey action, some messiness, some family drama. I hope not, Lawrence. And happy Hanukkah as well. All right.
Thank you.
Checking in on Bitcoin. The CoinDesk Bitcoin price XVX index is currently trading at 57,391. Bitcoin on the rebound, now up about 5.5% over the past 24 hours. The CoinDesk Ether price ETX index is at $4,365. ETH is up almost 7% over the past 24 hours. The new DFX CoinDesk DeFi index is at 530 points, advancing 3.4% or so. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. So Thanksgiving was volatile out there for you, Lawrence, but so has the crypto markets. What's going on?
Yeah, I mean, this was an interesting weekend. I mean, we had prices continue to sink and then all of a sudden rebound. I mean, part of it was, of course, the concern about the Omicron variant of COVID. It seems like they put a new model every few weeks as an upgrade in COVID. But this one kind of is freaking people out, and obviously it caused a sell-off on Friday. But you can almost see the wheels in the head of the market turn, like it was like smoke coming out of their ears. They're like thinking, wait a minute, what does this mean? Oh, wait, maybe there might be more stimulus coming up in the next few weeks or whatever. And maybe the inflation concerns aren't going to be as deep as before. And so we saw this like
it just seems there is a bit of frothiness. I'm seeing this DeFi protocol Omicron token has been jumping 10 times after its namesake COVID variant has emerged. So Emily, I don't know, what do you make of all these events going on?
Yeah, so I think we can go into this in more detail with our markets guest, but I think one of the most interesting things about the past few days is that it just shows that crypto is not really immune from larger trends in the global market. We've seen this before. We tend to talk about Bitcoin like it's this incredibly unique asset, but sometimes it just kind of goes with the stock market, and the stock market was reacting to fears of a new wave of COVID, and Bitcoin basically did the same. So the narrative to me seems actually relatively straightforward. But the question is why isn't Bitcoin performing in more of a unique way? So I think that's interesting for our markets guest.
On top of that, we've been seeing...
and to your point about Omicron rallying on this news, it just, let's remember that not everybody in trading crypto is smart. And that's an understatement.
Fair enough.
Thanks.
Well, earlier this month, Metaverse startup The Sandbox closed a $93 million Series B funding round led by SoftBank. Their native Sand token is at a market cap of $6.8 billion, according to CoinMarketCap.com. The Sandbox has partnerships with names like Snoop Dogg, AMC TV series The Walking Dead, and children's cartoons such as Care Bears and The Smurfs. Joining us now is Sebastien Borget, co-founder and COO of The Sandbox. Welcome to the show, Sebastien. So your token has been doing quite well, amid Facebook entering the arena. Well, are there concerns of them dominating Web3, or how do you see legacy tech giants like Facebook who are trying to enter into the metaverse, enter into Web3, competing among, folks that have first mover advantage, such as yourself?
Absolutely. Hi, everyone. Nice to be here with you. Hi. Well, I think first of all, the first thing we can notice is like it's been bringing a lot of attention from the general public and audience into what is a metaverse and what is the definition of metaverse. So that has caused like spikes into Google searches, and the metaverse is now a term that's broadly used within the ecosystem. As it stands by metaverse, it's like a digital parallel universe where us human beings will be able to experience more social, more rich, more interactive and immersive experiences through a 3D avatar that becomes a representation of ourselves. The fact that Facebook rebranded itself as Meta is a strong signal that they are definitely trying to take a new cap and the whole company. But you cannot just rebrand the company when the core of your goal has been for a decade, like really collecting user data without their consent most of the time, tracking them against their own privacy, and hence using that to better target users with advertising. And I think that's the key challenge they are facing, and why decentralized virtual world, decentralized open metaverses like Sandbox will win ultimately, is because we are more focused on putting the user first, putting the community first, give back the value generated by users as creators or as consumers or players, etc., with them through the true ownership of their digital assets, such as through NFTs, such as etc., through the true ownership of their currency, such as Sand token, and the true ownership of their identity online with an avatar, that 3D representation. Well, and unlike Facebook or Roblox or Epic, etc., we really put value creation and the return of all the value that those users bring as creators, as users, as being present and engaging, back into the hands of those users. 95% of the revenue goes back to them, and it's starting to create a new digital nation where users are truly being empowered. I think that's the key differentiator. Also, embracing the idea users can use their assets across multiple virtual worlds, transfer them and sell them on other marketplaces as well, etc., has been really growing an overall ecosystem, an open ecosystem built box key assets such as lands, sand, game asset as well. And behind has been really democratizing user-generated content and metaverse towards giving more leverage to creators, pushing for a true creator economy, and leading toward, I think, a world that is to be governed by through a DAO in the future.
So I'm wondering, everyone is on Facebook, though. We're now Meta, including everyone on Facebook, WhatsApp, and Instagram. It just has a huge market share of user growth and people right now. So how do you get those folks into something like Sandbox, Decentraland, other decentralized metaverses? And with their foray into the metaverse, do you think that they'll be more of a walled garden and they'll stick to that Web 2.0 mentality of keeping the fees for themselves and not giving users sufficient sovereignty over their own assets?
As far as we can read and hear from all communication, all the media and content they are showcasing, and Mark Zuckerberg statements, it seems like yes, they don't really allude toward like giving more ownership of their asset, of their creation to users, enabling them to launch a more business model, etc. Like what they are really trying to focus on is like, okay, this is going to be a VR, mostly VR kind of experience. You're going to either work in Facebook or play in Facebook and continue over like what we've already established. And I find it's going to be not that such a fun place to be, actually. And Facebook is definitely losing track as a social media across versus other platform and social media, even in Web 2. So I don't really want to let them take and claim the metaverse, while the metaverse can actually be much more fun, much more diverse experience, be bringing much more culture activities, such as like fashion show, virtual concerts, music, architecture, games, art galleries, museums. Of all of that can happen in the metaverse. Like you mentioned before, brands Adidas announced they are entering the Sandbox by acquiring a land. We have Snoop Dogg, we have Deadmau5, Care Bears, we have The Walking Dead by Robert Kirkman. That's fantastic. And I only know one place in the world that all those IPs can collide, and behind users can leverage the content from those IPs to make their own experience, their own game, their own adventure. That place is Sandbox.
Let's talk a little bit about just this whole concept of, virtual real estate. So what would cause people to buy real estate in Sandbox, for example, as opposed to just real estate in the real world? Like, other than a speculative investment, what is the point of buying real estate virtually? Like, what do they get out of that they couldn't get out of just because now the prices are going up so much that it's almost like buying actual real estate in the real world? So what is the advantage of buying digital real estate?
Just several obvious advantages. First of all, like as of today, we have more than 16,000 unique landowners. That makes Sandbox like the most decentralized in terms of ownership. And yet we haven't sold all the lands, right? We sold about 65% of our 166, 464 map, each one being a unique NFT, etc. There are different opportunities. As a landowner, you can publish your experience, your game, your creation, your story, your adventure onto your land and start monetizing it. The way to build an experience, is monetization into a land, is way faster than to establish a mortar business and wait for the first client, your first customer to enter and start monetizing it. So the speed at which you can turn a certain revenue from your activities into the land is incomparable into the metaverse. The second is like you can definitely have other business models, such as renting, such as staking, etc. All the decentralization and possibilities into our ecosystem, such as like launching your own NFT ticket, restricting access to a portion of it, creating a community of owners around it, and all sort of new engagement model as well is possible. I think also like this is really important. Like in this metaverse, users can finally become virtual neighbors from their favorite brands, their favorite IPs, be part as a collective group of communities around certain NFT collection like CryptoPunk, like Borget, and several others. And that creates also a great mix of culture and something that actually is no longer possible in the physical world. Like you cannot build next to Snoop Dogg mansion. Unfortunately, way too inaccessible. There's many other possibilities we've seen, like this partners into our ecosystem, such as Republic Realms, that have been acquiring land, developing it, launching a collection of fantasy islands. They recently sold their fantasy yachts for $650,000 on auction, which made it the most expensive yacht ever. We've seen people starting to create new sort of landmark and architecture, which will be, in my opinion, place new preference to gather people, gather community, and generate more social interaction, more chatting, etc. So,
if I could just
remember,
thing though, Sebastien, just that this word decentralization, is used, it's thrown around a lot. And remember, this is a very foreign concept to people who are outside of this industry, right? Mm-hmm. So when you're talking about like decentralized real estate, like what does that actually mean? Like how is buying actual real estate centralized? Like what is the decentralization here?
Well, the decentralization part is you actually, as an NFT, it's on blockchain. It's a representation of your ownership of it. And this is the blockchain, as we all know, is a public transparent database that is immutable. So we can definitely see the property of the land. We can do the proof of ownership of the land. And you do not need to rely on any government, country, or establishment to prove that deed of ownership indeed. Like the blockchain itself is that proof. And from there, you can, for example, start selling that land on a secondary marketplace without having to inquiry permission to someone else. It's the record of the sale is established on the blockchain. You can develop those business models like renting, fractionalizing lands, staking lands, and so on as well, without even asking permission to Sandbox or needing Sandbox for doing that. Land is a new sort of infrastructure asset that's established on the Ethereum blockchain as an E721 token for technical aspect, which is like the most common standard for NFTs. And then anyone can write its own smart contract to interact with it.
So, Sebastien, I'm glad you brought up the whole idea of revenue generating from land, because that's of course how actual real estate is valued in many ways. Is the rents and the net income that you can receive from renting out a property. But those things are affected by interest rates and by macroeconomic situations in the market. When you are looking at the data from everything on Sandbox, do you see any significant changes, like in a situation we had this past weekend where all markets, traditional markets, had dipped because of macroeconomic fears? Do you see that play out in the virtual world as well on some level?
I do think that we have a certain role to play as a platform to keep supporting the overall economy of Sandbox. We see that new virtual world and the virtual real estate that's part of it as a new digital nation which has 15,000 unique landowners, each one being potentially this business entrepreneur that's going to operate a game or a business on his land. And what's something and that's written in the smart contract is 50% of any revenue stream collecting on Sandbox platform, either from the primary sales of land or from the 5% royalty fees on any peer-to-peer transaction or other type of transaction, like users selling their asset, etc. We reinvest directly via our foundation to support creators, to support players, and to support stakers. So I think we have one of the largest, I would say, economical support plan to grow our ecosystem, to keep everyone involved, to bring value, but also at the very of being decentralized, like who benefit the most from the value that's being generated into that virtual world. And these are directly the creator who are building that content to the world. These are directly the users who are spending time bringing life to it, because an empty world, a world that's empty with no people living in it never come back to it. So just being present, engaging, brings value, and you can find that value. Earn NFTs as you play, you complete quests, you win, etc. So it's a gamified world where all your action, all the time you spend, is properly rewarded.
But well, I guess my question has to do with: are the macroeconomic situations outside of your universe here, in the physical world, is it affecting any of the transactions in the virtual world? Are you seeing significant drop-offs when, for instance, there is a sell-off in the global equity markets?
We haven't seen that since we announced the Series B fundraising with SoftBank, as well as recently the opening of our alpha season, which just started today, plus the arrival of Adidas. I think Sand has been moving from a top 100 cryptocurrency to 35 cryptocurrency on CoinMarketCap. We became the #1 collection over OpenSea for more than 7 days consecutively, with the largest GMV generated ever for virtual land. So I think there's maybe an opposite effect where, like, because the real world feels less secure to this younger generation, they might feel like there's a world, the metaverse, which they understand better, where their skills is going to be better valued, where they actually can create value, and hence it's potentially a better place for them to look and invest versus what their parents and other generation before them have done into the physical world.
All right, Sebastien, we got to wrap it there, but you also have a bit of news. Sandbox Metaverse Alpha is launching today after 4 years in development, which is a highly anticipated play-to-earn metaverse event. Now, the Sandbox has about 150 million in gross merchandise value, over 500,000 registered wallets, and as you mentioned earlier, 16,000 unique landowners. So congratulations. Thank you, Sebastien, for appearing. That was the Sandbox co-founder and CEO, Sebastien Borget. So crypto is on the rise, but unfortunately, crypto knowledge is still less than basic. That's why November has been Crypto Literacy Month, an initiative that aims to promote greater consumer education about crypto and Bitcoin so you can make better decisions about digital assets and your financial future. Since we're now near the end of Crypto Literacy Month, let's test what you've learned so far. Which statement best describes a cryptocurrency, money that can be stored physically or electronically, paper dollars that can only be used for physical transactions, a digital or virtual currency secured by cryptography, currency that can only be used for cross-border remittances? The answer to that quiz question is at the end of today's show. Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Megha Chadha of Forecast News.
Welcome to the Daily Forecast, November 29th, 2021. I'm Megha Chadha of Forecast News, covering all things blockchain. Bitcoin and Ethereum were hit hard on Friday by the identification of the new Omicron COVID variant. But a new week saw both regaining much of the lost ground. We'll take a look at that and a whole lot more coming up. Let's get you up to speed from Asia to the world. Let's kick off with some of the top stories out of Asia today. First up, Singapore-based crypto exchange CoinStore has entered the Indian market, despite the ongoing regulatory wrangle that points towards a ban on all private cryptocurrencies. The Indian Winter Parliament session, where the crypto bill is listed for discussion, has now begun. However, CoinStore says it is optimistic the government will introduce positive legislation to regulate crypto. The exchange also says the move is logical as a quarter of its total number of active users are located in India. Over in China, a warning has been sounded over the metaverse. An opinion piece published Sunday in the state-owned Economic Daily stated that the hotter the metaverse gets, the more the public should stay calm. The article said there may be social, ethical, and rule of law issues ahead over the metaverse and suggested that for small and mid-sized investors, jumping in is like licking the blood on the edge of a knife. You can find out more at forecast.news. Meanwhile, global markets were sent reeling by the discovery of the Omicron variant, and crypto was no exception. Most major tokens slid around 10% over the weekend, though signs of recovery had begun by Monday morning Asia time. Forecast News' Lachlan Keller has more.
Investor confidence across various asset classes, including crypto, was hit hard by the threat of more lockdowns and travel restrictions as a result of the identification of the new Omicron variant. Bitcoin fell almost 10% to a little over $53,500 on Friday, while Ethereum slid 13%, though both have since seen their prices recover most of those losses. One expert told Forecast News that while the wider market sentiment carried across to Bitcoin's price on this occasion, he doesn't see that being a long-term story.
I think it's an uncorrelated asset by default. It's not tied to the fortunes of national economies as tightly as some of the other assets we might see.
However, Miller does see Bitcoin's volatility falling, along with that of other crypto assets, as market capitalization grows. Meanwhile, he says market dominance is a very interesting metric, and though Bitcoin still currently rules the roost due to it being the most developed asset, that story is changing with Ethereum on the rise.
You've seen a huge amount of innovation and uptake and adoption and use cases coming to market that were perhaps in 2017 speculative, but today very real. I'm talking about NFTs, decentralized finance, decentralized lending, stablecoins using this network.
For Forecast News, I'm Lachlan Keller.
Over in Japan, could NFTs become advocates for literary translators? 2020 hit sci-fi novel Pure is being transformed into an NFT with due profit being given to the translators. Its author hopes the move could also bring Japanese literature closer to the world. Focus News' Danny Park reports.
Author Miyuki Ono's science fiction piece Pure is a love story set in a world where women must consume men in order to get pregnant. The short story went viral after it was posted on Hayakawa Publishing's online blog in 2019, gaining over 200,000 views. That led to it being published as a book last year. Now it's to be translated in English in versions which will only be available as NFTs on the OpenSea platform. In her blog, Ono said, quote, "By releasing this story and its translations as NFTs, I hope to suggest a new possibility for literary translation and encourage more translations from Japanese." She added that translators working in Japan face great challenges, often having to take on jobs outside of translating, such as teaching, saying they struggle to survive on the compensation they receive unless a work is published as a book. And even then, their reward may not reflect the level of effort put in. By selling her literary works directly as NFTs, Ono hopes to lead a movement where NFTs become a new source of income for authors and translators. Ono says her next move will be to release NFTs that include film rights and the rights to sell adaptations of her work. For Forecast News, I'm Danny Park.
And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Megha Chadha. Until next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager. Checking in on Bitcoin, the CoinDesk Bitcoin price XVX index is trading at $57,283. Bitcoin is advancing 5.5% over the past 24 hours. The CoinDesk Ether price ETX index trading at 4,353. ETH jumping up 6.7%. And the new DFX CoinDesk DeFi index is also jumping about 530 points, making an advance of about 3.5% for the day. Joining us now to discuss the crypto markets is Rufus Round, CEO of crypto trading platform GlobalBlock, right now in Hong Kong. Hello there, Rufus. Thanks for joining us. So we had a bit of a Black Friday sale on the crypto markets over the weekend, but now everything is rebounding. Bitcoin is up, ETH is up. How do you describe what is behind this volatility we're seeing?
Thank you very much for having me. Anyone who called the GlobalDesk sales team or traders would have perhaps received some color on Friday about the Black Friday sale, essentially driven by low liquidity moves from over-leveraged traders and fear thanks to the Omicron variant. There were only two ways the market can go thereafter, and one was sideways and the other one was up, in our view. If you're going to get more fear and stimulus, then Bitcoin benefits. And if the fears subside, then Bitcoin rallies as it becomes a risk on trade again in the very short term.
Can you just explain a little bit more, though, this correlation that we saw with Bitcoin and the traditional market? Because it seems like, at least on the surface, the market was just reacting to fear of this kind of new strain, and then Bitcoin seemed to react quite similarly. Is that a fair assessment of what happened? I mean, was Bitcoin just moving, at least initially, just moving in tandem with the traditional market, just saying, okay, there's this new strain of the virus, and that's what was causing it to go down?
Absolutely. I mean, correlations are always shifting, and it depends which length of correlation you're monitoring. But in the very short term, it will track risk prices just because there are always over-leveraged traders trading something somewhere, and Bitcoin, given its volatility, is a real attractive asset for most people who like to trade volatility. So in the short term, you've got a short-term movements. Prices are generally quite correlated, definitely with risk-on assets in the traditional investment world. But as time develops and Bitcoin's resilience is continued to be proven, you'll get a lot stronger hands holding the asset. This will make the correlation relax. Yeah, sorry.
No, that's so. The role of whales in this, or at least larger players in the rebound, how much was it? Do you suspect that this particular rebound was driven by larger players going out and buying on the dips, or was it primarily retail driven?
Tough question. The volumes haven't been that high, so I don't suggest that many whales have piled in this recent dip, but recent evidence has shown that longer-term hands have been adding and they're not liquidating. So I would suggest it's the fast money getting back in again in the short term, because there have been reports earlier today that the Omicron variant might not be quite so catastrophic as at first thought. So therefore, we're seeing a rally again.
All right. Rufus, thanks for weighing in on the markets for us. That was GlobalBlock CEO Rufus Round. And we've got another Crypto Literacy Month question for you to think over. Which of the following statements best describes decentralized finance, also known as DeFi, a system of finance that is facilitated by smart contracts on a blockchain network, a method of sending and receiving Bitcoin, a system of financial exchange that is facilitated by a small group of trusted intermediaries, or a strategy that emphasizes investing in a variety of securities and cryptocurrencies? The answer to that question is at the end of today's show.
Oh, I was going to answer it.
No. Welcome back. All right, we've got some breaking news. Twitter CEO Jack Dorsey is expected to step down from Twitter. The stock is soaring now over 6% in the markets. Joining us to discuss is CoinDesk Global Policy and Regulation Managing Editor Nick Day. Nick, what is going on? What do we know so far about this breaking news?
Good morning. We don't know a lot. There's just a report so far saying that Jack Dorsey intends to step down, citing anonymous sources. I don't think we've heard yet from Dorsey himself or anyone officially on Twitter to confirm or otherwise comment on the news. But if so, it would indicate that Dorsey would be free to focus solely on Square, the payments startup he also runs, or pursue other projects if he's looking to do so.
Mm-hmm. Also, there appears to be some headwinds for OCC nominee Saleh Omarova. What do we know about that?
Yeah, last week, Axios reported that 5 Democratic senators have expressed opposition to Omarova's nomination. And this is always going to become a party line vote. So those 5 senators will be key to advancing her nomination out of the Senate Banking Committee and to the entire Senate. Right now, you've got a pretty broad coalition that's opposed to the nomination. So, we've seen a lot of Republicans express skepticism about her past work and about her, frankly, her childhood and her college education. You've seen a lot of major banks express opposition because, she wants to regulate banks heavily and has, made some comments about whether or not commercial banks are even necessary at the, in the current roles they play now. So, this has been a pretty contentious nomination so far.
Interesting. Thanks for the update, Nick, and I hope you had a restful weekend. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Tomorrow is Giving Tuesday, a global charitable movement to give back during the holiday season. For all our viewers out there who want to contribute crypto for good, our next guest does just that. Please welcome Pat Duffy and Alex Wilson, co-founders of the Giving Block. Hello there, Pat and Alex. So CoinDesk has previously used the Giving Block to raise money for COVID relief. So what are your plans for Giving Tuesday and how does it work?
Yeah, thanks for having us on. We run a campaign called Crypto Giving Tuesday. So it's the campaign for nonprofits who fundraise crypto on the big day. And pretty much how it works is crypto users have a unique tax incentive to give crypto to nonprofits directly. Nonprofits are really eager to tap into this donor base. So it's the main day where they sort of kick off the month of December to fundraise more effectively. And they drive a lot of their first-time crypto donors in on November 30th this year.
So what is that tax advantage? You just mentioned it. Why not just sell your crypto potentially at a loss, take the cash and donate it?
Yeah, the tax benefit is really similar to donating stocks. So for the donor, that means if you're donating crypto instead of cash, you don't have to pay capital gains taxes on that crypto. And you also get a fair market value deduction at the current value of whatever the donated crypto is worth. So for a lot of people, that could be worth 20 or 30% more. And since the nonprofits are tax exempt, they're not paying taxes on it either. So it's really about 20 or 30% better for both parties involved.
With crypto prices soaring, has there been also an increase in giving? Is there any correlation between sort of this bull market and the amount of charitable activity happening in the crypto market?
Yeah, the volatility in general is good for crypto giving. Going up a lot is good for it. People get these big gains, they exit their positions, then they have capital gains burdens to offset with a charitable gift. And then also sometimes you see a bit of a dip in the market. And as people start thinking maybe it's not going to go up permanently forever, every day for the rest of their lives, they start harvesting losses or they'll just start selling out of a position. We see big surges then. So the volatility of the crypto market is a big driver of all of the upward movement we're seeing in crypto giving. We're on pace for us as a platform to do a little over $100 million in crypto donations this year.
And Alex, what were some of your charitable goals and who are some of your biggest donors?
Yeah, so we work with about 1,000 different nonprofits now. And it's all shapes and sizes, right? It's local schools, local churches, local YMCA chapters, but also your large national and international brands like Save the Children, like United Way Worldwide, like American Cancer. And a lot of these groups are raising millions of dollars a year from donors they weren't able to access otherwise. Mostly it's individuals donating, but we're seeing a lot more corporate giving too. We recently rolled out a corporate philanthropy program. Because a lot of companies are looking to, give back to the community and support nonprofits that support crypto, essentially.
Which nonprofit has been the biggest recipient of crypto on the Giving Block, and who manages the wallets?
Yeah, in terms of nonprofits fundraising, there's a bit of a split. There are certain partners we work with that are more institutional. You can think of like donor advised funds. The biggest donor advised fund that we work with is on pace to do about $500 million this year. That's separate than charities crowdfunding. In terms of charities crowdfunding, low 8 figures is kind of the high watermark that we've hit so far, but we think that's going to continue to rise. And then in terms of the wallets themselves, they're institutional exchange accounts connected to the nonprofit that allows the donor to get the tax incentive and then have that paper trail they can connect back when they go to the IRS and say, hey, I gave to a charity, versus back in the day, charities used to kind of just pop up a wallet and accept a gift. at which point, sometimes it'd be really tough to actually verify that you've given money to a charity and claim that tax incentive that is the main driver behind it.
All right. Well, the website is thegivingblock.com to donate. Thank you, Pat and Alex, for joining us. That's Pat Duffy and Alex Wilson of The Giving Block. All right. Time now to check in with Crypto Twitter with our tweet of the day. This is from author and apparel maker Bobby Hundreds with a helpful explainer on what NFTs are, tweeting, "NFTs are simply a way to own something on the internet. You've been conditioned to believe that everything you post on your social media or online is for free. Your photos, your videos, your thoughts, but that was a lie. The social media companies, the web companies, they were all making money off of your creations. NFTs now give you ownership of that work." All right. So as we close out Crypto Literacy Month, let's test your crypto knowledge. We asked you earlier which statement best describes a cryptocurrency: money that can be stored physically or electronically, paper dollars that can only be used for physical transactions, a digital or virtual currency secured by cryptography, currency that can only be used for cross-border remittance. Any idea what that could possibly be, Lawrence, Emily? Here's...
Oh, I got it. It's C.
Oh, there it is. A digital or virtual currency secured by cryptography. Okay, excellent.
In your face.
All right. And which of the following statements best describes decentralized finance, also known as DeFi, a system of finance that is facilitated by smart contracts? Okay, there we go. There's the answer. And very, very cool. All right, so some crypto literacy for you. You can take the rest of the quiz at cryptoliteracy.org. That's it for First Mover. Thank you, Emily Parker and Lawrence Lewitton. I'm your host, Christine Lee, and I'll be back live at 3 p.m. with all about Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.